Hello and welcome to the Weekend Investing Daily Bite of 17th of January. Another day where the markets remained in the doldrums. We are very near the recent bottoms. The market came down, filled some gaps, uh, moved up about 100 points from where it was at the bottom today. But no real gain as such coming in the markets. We are just about trying to hold the ground at which we have spent the last 2 3 sessions. um, Nothing to say that the market will not fall down any further in the coming days, but one should always remain optimistic in the market. That is the only way in which you will be able to invest and hope for the future. Of course, have a strategy, have your exit plans, whatever structure you are using, all have all that. But above all that, you will need to remain optimistic, because if you have a pessimistic view of the markets or of the future of Indian markets, then you cannot invest in any case, regardless of whatever strategy you may be following, whether momentum, whether value, whatever maybe you may be doing. If you are not optimistic, then you can't really perform in the market. So with that thought, let's move into the video. So today we are also announcing opening of some limited slots in our HNI strategies. Subscription window is going to open on 25th January. If you have any interest, please submit your interest in the description link and somebody will get in touch with you. So are you able to stay with the strength in the markets is the topic of discussion for today's video. That will come in the second half of the video. First, please read the disclaimer and do subscribe to the channel if you haven't so far. So let's look at the markets. As I mentioned, just about within the range of where we were on Monday. The entire week has been spent within this 400-point range, 23,000 on the lower side, 23,400 on the upper side, and we've sort of just spent our time here. It would be good if we were to spend another 12 days somewhere near this only before the budget comes and induces some more trending nature to the market, up or down, I don't know. The market in run up to the budget may also try to maybe the shorts may try to cover their position in case there are heavy shorts in the markets. uh, Longs have already, of course, the hot money that was, or the leveraged money would have already petered out quite a bit in this fall from September end. So the worry, if at all, would be with the leverage shorts and not with the leverage longs. And that probably can induce some kind of a pop before 1st of February. Before that, of course, is Monday's importance, where Monday night we'll start to hear President Trump talk about what he plans to do, and that may impact the dollar. And in line with that impact will be the impacted emerging market currencies or emerging markets themselves. So there's lots coming up in the next 10 days for the markets. Nifty down 0.47%. Nifty Junior, however, was reasonably green, 0.76% gain on this. It is not yet recovered back to its breakdown point, but no complaints for gaining 3 or 4,000 points in the last 3 4 days. 0.76% on Nifty Junior. Mid caps absolutely flat, just like yesterday. No change, 0.12%. Small caps also no change at minus 0.04%. Absolutely have gone listless in the last 2 days. Bank Nifty, however, was clobbered 1.5%, largely on the back of Axis Bank, its results and its management speak. So Bank Nifty has kind of given up what it gained in the last 2 3 sessions today. In terms of the advance decline ratio, you have 255 advances to 242 declines. So pretty much even Stevens in terms of advance to decline. Heat map for the day, Reliance is the only major support that was there in the markets today. 2.83% on Reliance, ITC 1.7%, Nestle 2.2%, Tata Consumers, Power Grid, L&T, Asian Paints, BEL. These were some of the stocks that were gaining ground, and you had some big losses in banking space. ICICI Bank, Kotak Bank, uh, HDFC Bank, all getting marred because of Axis Bank results, which was down 4.5%. TCS, Wipro, and Tech Mahindra down in sympathy with Infosys, which was down 5.8%. So a big shock from the banking and the IT space to the markets today. In the Nifty Next 50 space, you had some losses in Varun Beverages, Adani Power, Chola Finance, LTIM, Ambuja Cement, etc. But some nice gains in Lodha, capital goods like ABB, Siemens, BHEL, Zomato, HAL, Naukri, IRCTC, LIC, DLF. Several names were popping up in the Nifty Next 50 space. Within the sectoral trends, meaningful to say that IT, private banks, and banking index uh, dragged the market down 2.7 to 1.5% down for the day. And for sectors, public sector enterprise stocks, real estate, energy, infra, metals, and commodities, they were pulling the market up. FMCG for a change was up 1% for the day, 0.7% up on pharma also. It's been a mixed bag since the last 1 week. You had half the sectors gaining a little bit, half the sectors losing. But over the last 1 month and 3 months, mostly all sectors are in the red. So no real, trends are there on the upside for any sector. IT stocks, as I mentioned, 2.68%, again back to the trend line from where it has broken out. And you can see the top names that lost in the IT space here. Coming to the topic of the day, are you able to stay with the strength in the market? This is a very, very crucial part of, I would say, high performance portfolios. There is no, medals for having borne losses or having had stocks in loss territory and then coming into profits. If you stay with loss making stocks, it is very difficult to come out of those holes, especially if they get deeper. And the better way is probably to remain with the strength in the market, to remain with the performing sectors of the market, to remain with the performing stocks within a sector in the market, and not have the negativity of losing stocks, or the fact that I have 10 stocks in my portfolio, 8 of them are losing. I don't know what to do with them. I don't know whether they will go up. I don't know how long they're going to stay down. All that, you know the thesis of uncertainty tends to reduce your own confidence in investing, as well as when you find that your stocks are not performing, other portfolios are galloping away, you also tend to get a sense of inferiority, or maybe my stock selection is not good, or I'm not as good as an investor as others are. All those mental games will get thrown out once you start to stay with the strength in the market. So one such metric that we'll talk about is golden cross, but we recently covered the death cross. I hope you saw that video. Nifty 50 incidentally has hit the death cross today. So 50 DMA has crossed below the 200 DMA on Nifty. So there may be algorithms and rule-based strategies that are going to sell off because of this now. And in today's episode, we will cover the golden cross, which is the reverse of the death cross. And our objective from this session is to help you align with the philosophy of finding and staying with the strength in the market. So when 50-day moving average uh, comes and cuts from the under of 200 DMA, the 200-day moving average, that is called the golden cross, exactly opposite of what is the death cross. The death cross is when 50-day moving average goes below the 200-day moving average. And these are very simple facts, uh, simple indicators based on the price, and this will give you largely a framework for seeing whether your stocks are in that space where you should be considering them, or they are not in that space where you should be getting out and potentially not be looking at them. So that is the sort of the purpose of golden cross. So golden cross is when 50 DMA moves over 200 DMA from the bottom. That is the golden cross. And to add another sort of metric to it is that price is above 200, above the 50 DMA, which is above the 200 DMA, is another sort of subset of the golden cross stocks that can be also be used. So we'll take both these parameters to assess the benchmark and sectors on these two metrics. So we've listed here the indices and the number of golden cross stocks within them. So for instance, Nifty 50 right now has 38 stocks out of 50 which are in golden cross. So 50 DMA is above 200 DMA, very good. 76% stocks in Nifty are above the golden cross. In the Nifty next 50 space, you have only 14 stocks out of 50 which are in golden cross. So only 28% are in golden cross. In the mid cap space, you have 56 stocks which are 37% in golden cross, and small cap is at 50% in golden cross. All good. Now, if you were to compare it to the next level of filtering, where you're saying the price should be above 50 DMA and the 50 DMA should be above 200 DMA. Here, only 8 stocks out of 50 are are fitting that bill, and that's only 16% of Nifty. In the Nifty next 50 space, there is only 2% of stocks, one stock which satisfies this criteria as of today. In mid cap space, there is only 11% of mid cap stocks that satisfy this criteria. And in small cap space, there is only 15% or 37 stocks which are satisfying this criteria. So this golden cross is a great criteria for assessing whether stock is in uptrend or not. And the second criteria that we're using is a subset of the golden cross where price is above the golden cross also. And you can see that where very limited number of stocks are above the golden cross. Within the sectors, for instance, if we see auto space has 27% golden cross, 7% on price basis. IT has 90% stocks in golden cross. So IT is one sector which is doing well, but recently prices may have moved down, and hence there is no stock in IT space which is above the. So there could be a case where golden cross is there majoritarily in the sector, but prices are already coming down. So there is a mismatch from that view to this view. PSU banks, only 17% are in golden cross, no stock satisfying the second criteria. Financial services, 40% in golden cross, 5% only satisfying this criteria. If we see other sectors, or let's do this, that we'll see the maximum number of. So consumer durable is the space where we have 20%, pharma is 15%, and metals, where some stocks are there at least which are satisfying this criteria. In terms of golden cross, there are some stocks in IT, pharma, and services which are satisfying these two criteria. And of course, there are many sectors where none of the stocks are identifying within the buy range for these sectors. You can see many sectors are there under 10% of this. So it essentially is telling you how bad the situation right now is from a shorter term perspective. The longer term golden cross has not yet gone to zero for all the sectors. You still have 10-17% at the minimum, and you have 90% as the top. But for this, and for this second part of the filtering, that is telling you an immediate impact where the prices are versus the moving averages. So you can do this and some analysis of this kind to really review your portfolio from time to time to have concrete exit plans and exit strategies for your portfolio. So constant evaluation is important to assess the strength and the weakness in the markets, and that's what we do in the rebalance. When we do a weekly rebalance or a monthly rebalance, we are evaluating whether the stock should remain in your portfolio or not. So the money needs to be deployed into stocks that are doing still well, or maybe stronger than at least the rest of the stocks in the pack. And this takes care of the sectors. When once the weaker sectors give up to the stronger sectors, your money also should be moving along out of the weaker sectors and into the stronger sectors. So that gives you the opportunity to ride the winners and ditch the losers. And we have a portfolio momentum report at weekendinvesting.com where you can add your stocks and your quantities, and it will give you a complete momentum score for your portfolio. It will tell you which how many percentage of your stocks are weak and how many are strong, and it will tell you if you are concentrated on some parts of the portfolio. So you can use this utility on our website, and do mention in the comments how do you feel your portfolios containing stocks from sectors that are not doing well. How do you think you're going to deal with that? Are you going to stay with that sector till it performs? What if the sector doesn't perform for the next 3 years? There needs to be a framework on how you address these issues in your portfolio to make sure that your portfolio remains healthy and you keep making decent amounts from the market. Thank you so much for watching. Do like and share these videos and subscribe to the channel if you haven't. Just to remind you, we also now have a Hindi channel which is also having daily bites and several content pieces on it in case you wish to listen to this in Hindi. Thanks so much. Bye bye.